April 9th, 2025. The market, well, first and foremost, we're up almost 9% today. I thought the market had circuit breakers at 7%, 13%, and 20%. I know it does to the downside. And in 2020, when I was trading, I saw the market get halted after going 7% upward. So I know it has them to the upside as well. So I don't know why we didn't get halted at 7%, but I did not trade any of this because I assumed that we would get halted at 7, and I didn't want to touch anything past that. Obviously, good 3-bar micro channel to say the least, 46, 47, 48, a major bull surprise. So it was reasonable to be buying, the close of 48, below 48, expecting more to the upside, but I was too concerned with the potential of being halted. So early in the day, for those of you who don't know, there was some sort of announcement about a pause on tariffs or something along those lines, which is why we had an 182-point bar followed by an 170-point bar followed by an 100-point bar. This is obviously a massive rally, right? 9% plus rally. It should control quite a few of the next couple of days. So bar one and two, probably big enough for a second leg. I think it's leg one up for the bulls. Bar three, a reversal bar, a possible high of the day, but low probability since the prior day was a bear trend day and only a 25% chance of a follow through bear trend day after a bear trend day. Disappointing follow through on 4. So some traders buying back their shorts above 4. Other traders are willing to scale in above 3. The reality is if you sell below 3 with a measured move above 3, you're going to win that trade a high percentage of the time if you're willing to scale in more above 3. So the traders who sell the close of 3, they'll sell more above 3, expecting it to get back to their price. 4 through 7, 4-bar micro channel. So odds are we get back to at least the 7 close. I thought we would probably get above the 7 high at some point today, simply because 4, 5, 6, 7 was, a 4-bar micro channel, and that's usually enough to get at least some sort of second leg. I think bars 8 and 9 are leg 1 down for the bears. So even though we're pulling back 10, 11, 12, 13, I think the odds are that we're going to go at least one tick below the 9 low. 14 and 15, I think, is leg 2. So leg 1, 8 and 9, leg 2, 14, 15. So you can sell the close of 15, basically betting on leg 3. 16 through 18 is leg 3, and micro gaps in leg 3 are a bit more climactic, so you have to be careful. I did not sell the close of 18. I sold as we were pulling back. I sold the 18 high, and then I sold more up here. And then we got a 4-bar micro channel against the 3-bar micro channel. So 19, 20, 21, 22. 4 bars without going below another bar. To me, when I get a 4-bar micro channel against my 3-bar micro channel setup, I usually just look for the fastest way to get out. So I sold up here, I scaled in up here, and I just got out at break even, I believe, basically at the low of 25. My break even was somewhere around here. So I just got out at break even. I did not sell 27 because I thought this was like 3. So I thought this might be like 4. So I just basically sat out. We were obviously forming a triangle. 32, 33, 34, 3 straight bull bars. I did buy the close of 34. I made kind of a mistake. I bought small, and we rallied above 30, 34 during 36. And then I ended up just exiting on the close of 36 because I wanted it to close up here. It's not really good always in management. Good always in management would have me exiting below the bar 44 low. I thought it was okay to be buying this close and holding, but I was too paranoid about the trading range price action. So I ended up deciding to not hold. So, I think it would have been better for me to hold and get out below 44. Obviously, I would have made a little bit more money, but it's not about the money. It's just about the management. True always in management would be getting out below here. 43, a huge bull bar, climactic, top of the trading range, like 4, 1, 2, 3, 4. So not really as good as it could be. And then 46, 47, 48, 49. I think 49 goes below 48. It does by a tick. Yeah, it goes below by a tick. Obviously, this is gigantic, right? Anytime, I mentioned over here, a couple of huge bars are going to control a large piece of the rest of the week. These are going to control probably the rest of the week. So I would imagine tomorrow, it will probably pull back because I would imagine the bottom of the trading range is the 51 close. So this is a bull channel, right? Spike, pullback channel, and leg 1, pullback leg 2, pullback leg 3. So I'd imagine buying up here is buying pretty late, but if you have a wide stop, it's fine. The traders buying up here are willing to scale in down to the bar 51 close, betting that they're going to get another leg up. In the worst case scenario, it's a trading range. So trader, we might have to test back into this area tomorrow, maybe all the way down to the 51 close. But if we do, I would imagine there are traders here waiting patiently to buy, and will form an upper trading range basically in this area. But this is enough to the upside that I would expect us to get a measured move up. Whenever you get a rally this large, we should get a measured move. And that measured move would take us to 57.50. So I don't know if we get there, probably not tomorrow, potentially Friday, but I think sometime over the next couple of days, we're going to end up getting a rally up to the 57.50 area. Just because when you get moves this large, like it's going to get a second leg, and it's going to get a measured move. 46, 47, 48. It's too large to not get a measured move. It's so likely. So that's why traders are happy to buy this close with all this risk, knowing they can scale in and at the very least break even. The daily chart, I mean, this is a huge bull bar, right? It's big enough that we'll probably see some profit taking. It just looks like a vacuum test of the moving average. And I think it's pretty clear we found the bottom of the trading range here in April, around 4,800. So the question becomes, where's the top of the trading range? Did I turn on extended hours? I did, right? I did not. Okay. Question becomes, where's the top of the trading range? And, I think it's very possible that the top of the trading range is, 6,000, 6,100. Does that mean we go straight up? No. With how strong these three bars are, we probably have to go a little bit more to the downside before we go up. But I think that basically this is going to stall and we'll go sideways for a couple days. This is big enough to get a second leg, and we have at least two big legs down in a trading range. So I would not be surprised if we got back to 6,000. I think it's pretty clear that 5,000 is going to be important support if we get back to it. And odds are, if we rally back up here, we're going to start forming like basically a pretty big trading range. The weekly chart, I thought this would be a bull close, but obviously, it's pretty hard to predict a 700-point bull bar. But the bears or the bulls, I see two legs down and a big bull bar, basically causing a failure here. So I think odds are we probably go at least one tick above this high within, I don't know, maybe a month or so. So I don't know, to be honest. It's the price action says high two and tight channel down. So we might go a little bit more sideways, but this is a big enough surprise that we should go higher. But it's a big bar, big risk. So it might go a little more sideways first. But it can be difficult. The price action always stays the same, right? The news doesn't affect the patterns. The patterns are still there, but obviously you get stuff like this sometimes, which is just a little bit more difficult to trade. And the monthly chart, that's pretty disappointing if I'm a bear. If I was shorting for any reason down here, and then all of a sudden this bar gets bottled way back up, well, now this 3-bar micro channel is really disappointing. So if we basically end up, we got a 21% correction, and if we end up rallying back up into this area, we'll probably get back to a new high. Like I said, I wasn't as sure because of the size of this this doji bar. It's basically a doji bar. I didn't really think that was going to start a big bear trend, but you never know. But I think that 5,000 is probably going to be the magnet. As I mentioned, we went back to it, and regardless if we get a bull close on this month, I think that even if we go to a new high, we do end up coming back down to 5,000 again and probably oscillate around it. All right, that's going to be it for this review.